What's going on, familia? I've been hearing all over the internet lately about a looming housing market crash. And so I want to jump on here and provide a little of my thoughts, as well as a word of caution to everyone that's following this. But first, just to bring everybody up to speed, the talk of the town is that we are in a housing bubble. And basically what that means is that housing prices for the past few years have been going up and up and up without any signal of coming down.
Now that's a bubble.
But just like any other bubble out there, eventually the bubble's gonna pop. And many are arguing that this bubble is gonna pop really soon. Why? It's because the Federal Reserve has continued to hike their federal funds rate. And basically the federal funds rate is the interest rate that banks charge one another for loaning each other money. But the important thing about that is that mortgage rates are heavily influenced by this federal funds rate. So for example, if I was gonna go buy a house a year ago, my mortgage payment might be lower than what it is now just because of the interest rate that I probably would have gotten last year compared to now. And so many are arguing that because mortgage interest rates are continuing to go up, eventually buyers aren't going to be able to afford their housing payment, which will force housing prices to come down to be able to accommodate that housing payment, eventually popping the bubble of high home prices. But here's where I want to provide a little of my thoughts, as well as this word of caution, because everybody that's out there talking about the housing bubble and this housing crash is normally talking about the housing market as a whole, as a national market, but they're never really taking into consideration everybody's local market. And that is very crucial and very important to take into consideration. In fact, I think it's more important to take your local market into consideration than this national market that everybody keeps talking about on the internet. And why is that? It's because every local market is different. For example, back in 2020, when real estate prices began to take off because supply was very low and demand began to get very high because everybody was starting to work from home, my local market was actually suffering a little bit. And that's because my local market is heavily dependent on the oil economy. And now if you remember back in 2020, oil price futures went down to negative $40. So the oil market was suffering terribly. And because they were, a lot of these oil field companies that are based here had to let a lot of people go. And when a lot of people were let go, a lot of people moved, a lot of people left, a lot of people couldn't afford their home anymore. And so what ended up happening here was a little bit of a softening or correction in home prices, because before that, oil was booming, we were doing great, the economy and housing here in this local market was amazing. My local market did the exact opposite of what the national market was doing. Everything was booming back in 2020. My local market, it was suffering.
They ask you how you are, you just have to say that you're fine.
And so now I want you to think about your local market. What's going on there? Is it also heavily dependent on oil? Or is it heavily dependent on the tech industry? Or is it agriculture? Or is it something else? Are people moving in or are people moving out? How are people being affected by this in your local market? Those are all really good questions to ask yourself and find answers to before you take this whole national housing crash into consideration. So it's really good to follow what the national housing market is doing, but I would argue that it's more important to follow what your local market is doing. So now my word of caution to anybody that's thinking about buying a home right now. Yes, interest rates were lower last year, but if you can get an interest rate between 3 to 4%, I would argue that that's still very good. Now, if you couple that along with a very good deal, let's just say your agent was able to get you a home that was under market value, then you got yourself a great deal and you got nothing to worry about. And now my word of caution to investors. Pay attention to your local markets. Talk to those local agents that got the boots on the ground. And don't talk to just one and get the opinion of just one agent on what they think the local housing market is, but get the opinion of various agents. And then only after talking with various agents about their opinion and researching your local market can you come to a clearer conclusion as to what your local market is doing, where it's been, where it's at, and where it's going. And with that conclusion, you'll be able to invest more confidently. Thank you so much for watching, and we'll see you guys in the next one.